on its Asia business. So one to watch at the Open in an hour and a half. Now let's get some calls on what to expect for the local market session. Chris Weston joins us from IG Markets in Melbourne. Chris, good to see you there. I guess what did you glean from the overnight trading session? Obviously coming off the back of that very weak response to the US non-farm payrolls.
Not a lot, to be honest, Brian. I think tonight's one of those sessions, or sorry, last night was one of those sessions you can just sort of wash away. Yeah, we did see a continued flight to safety. I mean, you can see that through the bond market. You can look at record yields at the moment in Holland, Austria, France. The French coming out last night with a swift of bond auctions and bill auctions. And I think the one that got the sort of attention was this 6-month bill auction that they came through, and they actually got negative yields for the first time ever. You know, you have to pay the French government now, or the French Treasury, to look after your money. I think that's showing quite a clear message as well. We're actually seeing a renewed flight into French bonds away from German bonds. The spread between the two is coming off a little bit. You can look at the German 2-year yield as well. That's negative again, second day in a row that we've seen negative yields on the 2-year German bonds. So I think that's a pretty interesting side of things. A lot of sort of the westernised European nations are seeing negative yields, if not record low yields. So what we're seeing there is this. You know, we did see a bit of a push up in euro last night. Euro dollar, for example, trading from 122.51 in the early parts of our session yesterday, and it got up to and it's trading just north of 123 at the moment. I think Mario Draghi's comments were sort of a bit mixed. I mean, he did say that perhaps we're going to see an improvement in the eurozone towards the back end of the year, but he said, well, let's look at the data now. If we do see a continued fallout in the data, then we will look to change or cut policy, cut interest rates in the near future as well. So the euro didn't really react to that too much, and there's continued talk about the Spanish getting an extra year to try and meet their deficit targets, which clearly they're not going to meet at the moment. So they have been given a bit of a reprieve, but I think tomorrow we will hear more about them being asked to come up with some sort of plan to announce further spending cuts and tax rises to the tune of about 30 billion over the next couple of years. So that's going to be interesting to see. And then we saw Mr. Schäuble, the German finance minister, coming out and say, look, we're not going to see a banking supervision board anytime soon. As a result, bonds are not going to be bought back using the European stability mechanism anytime soon. And it's completely what, you know, if you look at yields on Spanish bonds at 7.05 at the moment, if you look at Italian yields at the moment, everything seems to have given back all the good gains that we've seen from the EU summit. So the market's completely got over that now. We're back to square one again. And if yields on Spanish debt continue to move back to around that sort of 7.5 level, then we will see risk assets suffer. So I didn't really learn a lot from that last night. And I don't think anyone was really expecting too much from the EU finance ministers meeting anyway.
So is that, you know, why we're seeing expectations for a pretty flat open really for our market then?
Well, I mean, if you look, just you look at the euro, for example, we've seen this sort of dislocation, I suppose, between different asset classes. The Aussie seems to be holding up around that 102 level. Euro's just been absolutely on an absolute tear against all the crosses and the majors as well. So, yeah, I think you have seen a bit of a dislocation, and I think given that the weakness we've seen in a lot of risk assets in recent times, we're just seeing a little bit of a pause for thought, so to speak, ahead of what's going to be some really important metrics this week in Chinese data. We got the CPI out the way yesterday. Not really a major issue anymore. Inflation, you know, that's why we didn't see much of a move yesterday on the Aussie on the back of the weaker than expected CPI print. It's about growth now in China. Trade balance numbers today will be very important. If we look at the pace of growth coming through the export side of things, if we see that materially decline, we'd probably like to see the Aussie come through that 101.50 level, which was pretty much the low yesterday, and that's the uptrend that's been in place from the 1st of June. It's also the 23.6% retracement of the recent rally we've had up to 103 and the big pullback there. So yeah, I'm looking at that number there. I think the flat open is what we're expecting. We're probably up about 7 or 8 points, and despite the fact that we saw the S&P and Dow decline last night, Dow futures were down about 30 points or so when we went home, so we were already pricing in quite a negative lead. So the fact that the Dow finished 16 points lower suggests that we are slightly outperforming that, and we should have a tiny bit of a pop on open. But BHP's ADR, if you look at that this morning, is down 3 cents. So yeah, 12% of our market's flat. You know, there's not really too much to go on. Some of the ag commodities did very well last night. You've got, you know, soybeans, wheat. They all pushed up to sort of 14-month highs last night because of the dry weather we're seeing in the US. I don't think that's going to have big ramifications on our market today. So I think, you know, tight ranges today, very low volumes again. It's something that we talk about time and time again. You know, I think people are just going to have a look at that trade balance numbers today. And if we get a really good number, perhaps it can breathe some sort of life back into our market.
And just quickly, obviously, US earnings season underway. Is that going to affect our markets? Well, today, over coming weeks as well. I mean, the Alcoa result there. One thing people were saying was that look, there was one bright spot, and in fact, they were talking about demand there, reaffirming their global demand forecasts.
I mean, I can talk a little bit about the Alcoa result. I mean, the stock was flat in the after-hours trade. I think it was up about 1.62% at one stage, and then people just sold into it. I was hoping for a bit more of a pop in Alcoa. I mean, it's the short interest in the stock is up about threefold since March, so people are very short this stock. And I thought the commentary from Klaus was actually quite positive as well, like you say there. I mean, he's talking about a structural deficit in the aluminium and aluminium market, 165,000 deficit in terms of aluminium demand over supply for the rest of the world, and something like 350,000 tonnes in China as well. He saw the pace of growth in demand in China at 11%. Now, is that good? Of course it is. I mean, with 11% demand in China for aluminium products is great, but the pace of growth is declining. I think that's probably concerning a few people. It was at 15% this year, so it's coming down to 11%. Again, it feeds into the argument that China is slowing down in terms of demand, but it's still 11%. That's fantastic for this company. And then I think you've got to look at the other issues where aeronautical demand is going to be up 13 to 14%. The car industry looks like it's still growing very strongly, but we haven't seen a pop in the stock. So I think it's just that pace of demand seems to be pulling back. So you know, I think that's probably the interesting thing, but it's still very healthy demand. But the earnings season is going to be very interesting. I mean, the analysts are expecting a 1.5% decline on aggregate EPS across the quarter, and about a 2.5% decline on revenue numbers. But what have we seen time and time again? Probably 12 quarters now. Estimates are always lowball, and perhaps we've got the premise again to beat that, and that's been a source of inspiration for our market. It's been a source of inspiration for the S&P, and we will follow the S&P. So hopefully we're going to get a better beat, but I think analysts now are looking at more. They're not just looking at the earnings, they're not just looking at revenue. It's about the outlook of especially some of these cyclical stocks. It's certainly stocks who are exposed to Europe and parts of Asia as well. So that's what we're going to be looking at more closely perhaps than the revenue numbers and the here and now numbers, because we want to get a sense of how we're beating and how the world's travelling in this sort of synchronised global slowdown at the moment.
Chris, we'll talk to you throughout the session. Thanks so much.
Thanks, Brodie.
Chris Weston there from IG Markets. A Victorian building and construction equipment hire company was fined $500,000 after an employee of one of its contractors was fatally injured. Evidence showed